Good morning to you all, the students and guests. We have
Morning.
very important topic. Everybody was waiting for this. It is income tax TDS provisions. It is a practically what is this TDS and what are the returns, how to, as an accountant, what sort of the steps you have to take. This is a very important meeting for you. And I'm very happy to introduce the speaker, senior most person, because I know him from 1980. You can imagine his experience. He is a practicing tax advocate. He's also qualified company secretary, and he was the secretary of AP Tax Bar Association. He was also the convener of All India Federation of Tax Practitioners. He was the first one to convene this All India Tax this federation meetings in Hyderabad, and he is a very senior most person. He is a well-known person to all. He has got a very practical exposure into all these things. We are pleased to introduce him to you. Sir, now the session is open to you. Panchagula, Chiranjeevulu garu, MCom, LL.B, FCS, practicing tax advocate. Thank you, sir. Yes, sir.
Thank you, Mr. D.B. Prakash Garu, Institute of Practical Accountancy. I'm very glad to take over and giving me an opportunity to interact with the students on tax deduction at source. Good morning to all of you, my dear friends, and respected D.B. Prakash Garu, Institute of Practical Accountancy, and other team members who have provided me an opportunity to interact my little knowledge with you all. Under Income Tax Act, today's topic is tax deducted at source. Income Tax Act 1961, as an individual or as a company or as a firm, nobody likes to depart their profit, their hard earnings. It must be true that the central government or the state government will not get the money on its own. They are the administrators. And it is in our democracy. Democracy is for people, by people. And in democracy, after all, we have to contribute for state exchequer. It may be central or state government. Even if we pay income tax, a portion, depending upon the contribution from the respective states, the amount will be returned to the concerned states. All this tax, what we are paying, honestly, will be for the development of the country, and individual priorities from state to state will differ, needs will be differ, and also the election will also be differ. So as when we are paying the tax, individual, company, firm, whatever it may be, we should be proud for the contribution what we are making for the economic development of our country. The state government or central government will be custodians, and they will be administrating and also making legislature and also enacting the laws. Every year finance bill will be introduced. We have to check up about our receipts and payments. And prior to the budget, I don't know how many of you may be knowing, a national survey will be done, and it will also be placed before the parliament. It only shows the status of the country where we are and what we expect from the government. The central government, after considering the survey report, will make necessary changes, necessary amendments, necessary needs, and the budget will be proposed every year in the parliament. The budget is proposed and put in the parliament only to get sanctions, and at the same time to record the expenditure needed, and also the income sources are also regulated. As we all know, nowadays the GST has come into force, Goods and Services Tax Act, though it is not part of my subject, it is taking care of the goods and services by central government and also by the state governments. And Income Tax Act 1961 is already in vogue. So Income Tax Act 1961 is regulating the tax structure, how tax is paid, who has to pay, why he has to pay. And all these are being regulated by Income Tax Act 1961. The students especially, you must go through a student edition or a bigger edition or a taxman edition, whatever it may be, Income Tax Act 1961. It is a ocean. It is much more complicated than any other law because money is involved. The government always looks after at the welfare of the people and society at large. And each individual, when he is getting money, how to pay the tax and what are the exemptions can be given and what are the concessions can be given, that will be given thought. That is why Income Tax Act is much more complicated than any other law, as I understand. For example, in Criminal Procedure Code, a section will be there and it will be simple in 5 or 10 sentences. There ends matter. But in Income Tax Act, it is not so. But so many conditions will be there so that the real benefit goes to the welfare of the common man who is paying income tax of his hard-earned earnings. Indirectly, we are contributing for the economic costs and economic development of the country. One should understand that ours is a developing country. And definitely there is a lot of development after getting 75 years of independence. We must have seen radios have gone and TVs have come and slim TVs have come. Older telephones have gone. We used to wait a lot of time for getting a telephone connection. We used to I belong to Mushirabad area where we had to wait for 20 years. And now cell phones have come, cell phones with cardless and cell phones with a card. Now a lot of communication revolution is going on. After all, communication and transport are the backbones for development of any country. Equally, money is required. The same money is rotated and taken back for development of infrastructure like communication, roads, transport. The central government sitting in Delhi and the respective state governments, after getting their due share, will be concentrating on the welfare, the development and welfare and capital items of the country's requirements. Not to bore you, and one important thing, what I like and I would like to share is the income tax has been derived, to the best of my knowledge, from Marshall's law of diminishing marginal utility. The law of diminishing marginal utility says this is a mango season. When I take first mango, the satisfaction I derive is something. And when I take the second one, something less. When I take third one, something less. And if I keep on taking 10 mangoes, I don't know whether I can take 10 mangoes, but for example, if I take the 10, the satisfaction will be reduced. Basing on the same analogy, the government, the economists, the elders, the seniors, and all the people have thought that enough is enough. And if individual has some money to eat, to have shelter, and also to sustain himself, the rest of the rest of the money earned by him should go for the development of the country. This is the backbone, and the taxpayers and even the students and others also need not suffer and need not feel for paying the tax. It is for our own growth, our sisters, brothers, our children, our grandchildren, and country is eternal and sustainable. The development has not come in a single day. The people, especially in Hyderabad, we experience metro. When I was going to school, we used to go by bus and even by walk also. Now I'm enjoying the metro facility. The budget of metro facility is about 15,000 crores, which L&T has successfully built, and we are enjoying the fruits. So the result may not be immediate. So we have to take a call in the long run, in the broader perspective, and also in the larger interest of the country. My children may not be benefited, my wife may not be benefited, my grandchildren may not be benefited, but society as a whole, we have to take, and keeping that spirit in the mind, be honest, and I request to pay the tax. And you can always avail the benefits, the concessions, and the other benefits what are given under the Income Tax Act 1961 thoroughly. To share with you, Tata companies, Tata group of companies, I am told, there is no authority, I am told that they will pay the least tax. And the experts sitting, about 10, 20 people in the office, they will go through Income Tax Act 1961 thoroughly, and the planning will be such that the profit earned will be returned back to workers, employees, and for the development of the Tata group of companies. See, wonderful. If Tata group of companies are part of our country, we are very proud, from highest Tata Motors, Tata Iron and Steel, to Tata Water is also being produced. Yes, we are able to get everything, every product, small, little, big. This is all I take as an introduction, and hope the audience will take me in the right direction, and also think in the rightly, and let us all pledge honestly to share, to pay the taxes, and never be cursing the ministers. I have to pay so much, I am paying, and lot of disguise is there from salary employees saying that we are the only person paying the tax. It is not so. All are paying. Nowadays, 70% of the income for the economy is contributed by corporates, and individuals. Firms are, of course, are there. They are also doing their best. They are paying. It so happened the employer is made tight for salaries and is made responsible to deduct the tax and pay to the government. Of course, in business also, lot of deductions are given. Like under section 35, whatever expenditure is incurred for successful running of the business, all the expenditure is allowed as a deduction. For salary people also, taking into consideration the difficulties faced by the salary people and the criticism also, the government is kind enough in giving straight away a standard deduction of 50,000. They will not ask you any receipts or any proof, anything. So the people with 50,000 standard deduction must be very happy. And apart from this, government is thinking various methods, and they have given a deduction under section 87A, where a deduction, a concession up to another 2,50,000 is there. So a person, even a salary person or business person, if he is drawing less than 5 lakhs, he need not pay any tax. The basic exemption as on today for the individuals is 2,50,000, and they can comfortably claim another 2,50,000, the concession under section 87A. So almost a person, individual, what I'm talking, salary class especially, when they are getting about 40,000, they need not pay a single pie tax. The people should be happy. And of course, corporates, partnership firms, they are starting from 0 and 1 rupee also, they have to pay tax. This is the government, after our members of parliament sitting in the parliament, and the prime minister, and his team of colleagues will be deliberating throughout the year to give the best to the citizens, to the society for the development and also for smoother collecting the tax. The Honorable Finance Minister recently has made it comfortable that faceless scheme is also introduced under Income Tax Act. So one need not go to Income Tax Department and roam about, waste their time and money. And now everything is online, and you can put your grievance and they will answer. And it is made all India basis. Any person will immediately, any concerned officer, any concerned commissioner will immediately address your grievance. So, and payment of taxes also, filing of the returns also, everything is made online. Hitherto, when we have started the practice, we used to go to the department, stand in the line. We have to file the return and wait for some time. Especially in the March 31st March time, we used to wait for a day also. So, lot of changes have come, and my only request is to be honest and also try to understand the government principles and also abide by the law, and any grievances through your chamber of commerce, business people and individuals through your tax associations. You can always represent to the Ministry of Finance and Ministry Prime Minister, of course, whoever it may be, and so that they will definitely be considering in the future budget proposals. Now let us, today's topic given to me is tax deduction at source. Yes, tax has to be paid. We are talking of only Income Tax Act 1961. When the Income Tax Act is there and the tax is to be paid, there are many modes. One, self-tax. I am there. I can take a challan number 260, and I can pay whatever tax I would like to pay, I can pay to the government. This is a self-tax. Voluntarily, I am going and paying the tax. The Income Tax Department nowhere receives cash or check. We have to pay it in the bank, concerned banks, and give them details. Then regular tax is there. This is what I've told. A regular tax in the running year, when now the April 22-23 is the year running year, I have some money and I want to pay the tax. I can go and pay a regular tax. Self-tax. Self-tax is also same. I am in a selfish way to avoid unpleasantry situation in the last minute from the department. From the time I go and I pay my income tax. And there is one more provision which is called advance tax. This is mandate. This is given the advance tax during April 22-23. You can make 4 installments one category and 3 installments in one category. You have to pay, estimate your income, total income, what will be the profit, and out of the profit, what will be 30%, 30%, 40%. And accordingly calculate, voluntarily you pay the tax before 15th September, 15th December, 15th March. However, so far, the department is reasonably convincing and also giving a helping hand. All the taxes due must be paid before 31st March so that for their calculation, accounting purposes, and for other purposes, the amount received by them will be well within April 22 to March 23. This is called a previous year. Running year is called a previous year. The year in which you are working is called previous year under Income Tax Act. However, they will be taking ahead 1 year, 23-24 assessment year. People need not should get confusion. This is a year of 23-24. From 1st April, 23-24 year has commenced. It is a financial year according to our standards. Certain foreign countries, certain other countries are following January to December is a calendar year, as a previous year. Earlier, some few business people of their trend, out of their sentiment, they used to start the previous year from October, say Deepavali, Dasara, whatever it may be, they used to start and give the accounts. Government used to accept them. Now, because of the confusion to the regulators, the government has made it a mandatory that all people in India, corporates, firms, individuals, cooperative societies, trusts, they should follow 1 year, that is 1st April to 31st March. Now we are in 1st April 22 and March 31st March 23 will be our previous year. Hope you all have understood about the background. Now let us see what is the concept, what is the thing, what is tax deducted at source, why the tax has to be paid, can I not receive the total amount? This may be a perception, but government also has to make so many arrangements, so many things to administer. Manpower is less, and as such, how to recover the money from the public? Then a scheme called tax deduction at source. Tax deduction at source is evolved and it is made a mandatory under section 192 to 195 of the Income Tax Act 1961. As I have told, I am voluntarily, I am going to bank, I am paying in April some amount, whatever I can out of my business or out of my salary, whatever it may be, I will be paying. But all are not so. Few people may differ. They may be good people, and definitely they will be thinking that to reinvest that money in the business, especially business people. And the salary people, they may be thinking that they have some priorities, payment of school fees, payment of household expenses, to purchase a new TV, to purchase a car. So many other priorities will be there, and postponing. In the last minute, when I've told that last installment due date officially is 15th March, then people run here and there. There will not be liquid cash available to you. Salaried people will get only 1 month cash, and business people will be normally due to get some cash from their creditors awaiting. Cash crunch will be there a lot unseen in the month of March, especially to pay the income tax, to meet certain personal obligations and see that accounts are closed. My suggestion is from the day one, we are fortunately in April 9th, you take from the day one, have your total income, estimate what will be the tax liability, and okay, 10% here or there, reduce it 10%, 20%, and start making payment of tax, planning tax also as part of like your other daily needs, so that this will release of a lot of tension to all the people in the last minute running here and there. Now we have now we have told about TDS. Yes, TDS is tax deducted at source. The government, after a careful thought, after due deliberations, has incorporated section 192 to 195, taking that into consideration. When you receive money, when a person receives money, the tax will be deducted. This is the motto behind the government. Myself or anybody, after getting money, I spend it. Suppose I don't get, I have to get 100 rupees, tax is deducted at 10, and I'm getting 90 rupees. I forget about 10 rupees. I have paid towards the tax, and I'm comfortable with 90 rupees. I will adjust, I will plan with my 90 rupees. When that 90 rupees is my money, so that I can spend without having any fear about tax payment in the last minute. Friends, now the scheme of tax deduction at source is like this. Under the scheme of tax deduction at source, persons responsible for making payment of income covered by the scheme are responsible to deduct the tax and deposit the same to the government's treasury within the stipulated time. We will start with income tax has 5 headings. We will start with the salaries. And a person employed, he is getting salary. He is going to the office, he is coming back, he is getting salary every month, comfortable, be happy, and getting his income. He will normally, as I have seen, the practice is initially they are not bothered about the income tax. Income tax has to be paid only in the month of March. It is a misnomer. It is a wrong. It is a part of every month. The cause of action arises the moment you receive the money. When you are receiving money from your employer, then the employer responsibility starts. He has to deduct tax and pay to the government. In the slide, they have to pay to the central government, treasury within the stipulated time. What do you mean by the stipulated time? When the person giving you the money has deducted tax, it is a duty to pay the same to the central government treasury within 7 days of such deduction. Under entire Income Tax Act, this is a very serious provision and serious act. If the government money is retained with the individual after deducting, it is a crime. And tax will be imposed, interest will be imposed, penalty is imposed, and I am sorry to say, prosecution can also be launched. Not by the income tax officers. Income tax officer will launch the prosecution. The matter will be dealt by Economic Offences Court. It is a district level court where white collar offences are being tried nowadays. It is in Hyderabad. To the best of my knowledge, in Telangana, only one court, that is in Nampally. We should not get such a situation where tax is deducted by anybody, company, individual, firm, whoever it may be. It is utmost duty of all of us to immediately pay to the government. Yes, recently we got 3 days bank holidays, 4 days bank holidays, whatever it may be. You have to ahead plan about the payment to the government, and you should give priority, and we should avoid the unpleasant situation from the department. Then the recipient of income, though he gets only the net amount after deduction of tax at source, is liable to tax on the gross amount, and the amount deducted at source is adjusted against his final tax liability. Friends, please try to understand. I am getting 100 rupees. 10 rupees is deducted towards my income tax. In the TDS mode, I am getting 90 rupees. However, my income for income tax purpose is 100 rupees, not 90 rupees. You can never say that I got only 90. How can you say this 10 rupees also belongs to you? This 10 rupees is also my amount. They have deducted tax on my behalf, and they are paying to the government on my behalf. The central government has embedded a responsibility to the person who is giving the money to deduct and also pay to the central government within 7 days of such making such payment. So my total income will be 100 rupees, and I can always, while filing my return, while finalizing my accounts, I can always take credit of rupees 10 towards income tax. If I have to pay more, I have to pay, and if I have to pay less, I can always claim a refund. So nothing to worry about the tax deduction provision, and it is a mandatory for the convenience of the government for administration of the Income Tax Act, the officials, and also the government. And we should never misunderstand or misuse this, because there are in course of time we will come across where your tax income, where your total income does not exceed taxable income. Then you can give form 15G, and for senior citizens you can give form 15H, so that the TDS will not be deducted to you. The bank or the employer, of course, employer is different, the bank, third parties will not be knowing what will be your sources of income. They will be simply accepting 15G, and they will not make any deduction. This, if we give a wrong declaration, this is a dishonest behavior. Yes, nowadays many people go to bank and they simply give 15G without having a homework of their income. What is their income? What is their likely income? What is their future income during this period, April to March? Estimate whether I will come to taxable or not. Hurriedly, they will go to bank and give the 15G so that tax is not deducted, and we are happy. It should not be like that. So they should individually, they should make homework whether I am coming to taxable, take expert opinion, take some seniors opinion, take some friends opinion, take some opinion other than yours, cross check. You may be an expert, but please try to cross check whether I am falling into income tax or I am not falling. If I am falling, what? Then try to avoid giving Form G so that ultimately all people will be in soup and 15H, whatever it may be. Mostly this will be done in the case of banks. Simply, you take 3 copies of 15G, give it to the bank. Bank will not deduct tax. You are happy for 11 months. And in the March month, you will be running. I don't have money for my groceries. I don't have money for any money. Everything I paid for income tax. You see, lot of people saying in the month of March, we have paid income tax. We have paid income tax. That is a bad planning. You need not pay income tax in the March month only. From April to March, if you plan, see that every month you can pay some money. You match it with electricity. If you don't pay electricity charges, within 7 days of the next month, he will come and cut the electricity. So we are dependent on electricity for so many things, for water, for computer, for cell charging, for so many things. In the same way, if one plans about the tax payment also, coming into the fold of the government's honest tax paying, we will be very comfortable. We will be very happy. Now, because of the TDS is the topic to be given to me, and TDS is also a very big ocean topic. We are touching the primary principles. However, if you have any doubt, my mail ID is given, my cell number is given. Anytime anybody can contact, and we can share the knowledge. We can share the professional knowledge. Definitely, we will exchange, and preferably, I may be going to the court between 10 to 5. Please avoid that time. Mail anytime 24 hours, and you can call me, and we will share the professional knowledge, and we will go in hand for the betterment of the society. The Income Tax Act 1961 also, this is applicable for the entire act. They have specified persons. The act itself, by legislation, they have specified persons. We will see who are the specified persons. The central government or any state government or any local authority or any corporation established by or under central, state or provincial act or any company. Here we can take as a company registered under Companies Act 2013 or any cooperative society, any authority constituted in India by or under any law engaged either for the purpose of dealing with satisfying the need for housing accommodation or for the purpose of planning development of improvement of cities, towns, villages, or for both, or any society registered under Societies Act 1860 or under any law corresponding to that act in force in any part of India or any trust or any university established or incorporated by or under central, state or provincial act, and an institution declared to be a university under section 3 of the UGC Act 1956. Now we have seen empty number of private universities have come. The central government, state government have given permission, and under UGC section 3, a private university can be set up. So on par with the central state government universities, the government also recognized private universities. Any foreign government or a foreign enterprise or any association or body established outside India or any partnership firm or any individual or Hindu undivided family association of persons, if amount paid credited is not exclusively for personal purposes. Now, the TDS is required to be made under the following sections. As I have already explained, the provisions are section 192. Section 192 deals with the salary income. Up to 195 we have taken, and the major area will be salary. Yes, salary income, there should be employer-employee relation should be there. Then only that income is called salary. If a person is working for contract basis, that amount goes to income from other sources. So he will not come under salary head. When the employer-employee relation is made, is available, is established, then section 192 comes into play. Normally, as I've already discussed, not to comment about anybody, but it is a practice going on. It is a practice with all the people, and the salary income will be paid as it is. I have not come across anybody in the first month itself paying income tax. Maybe few exceptions may be there. I have not come across. So in the last para of my presentation, I have given a table. Suppose you are getting 5 lakhs income also, salary, for example, salary person. You need not pay any tax. Beyond 5 lakhs, beyond 5 lakhs, suppose you are getting 45,000. What should be your monthly income tax? A table prepared and given in the end of this, you can volunteer the person receiving. Actually, it is the responsibility of the employer to deduct. Always the employee says, no, I am going to invest. I need not pay any tax. I will invest in Dasra when I get bonus. In December, when my wife gets bonus. In March, when I get some amount. Some pretext, they will be normal human being error. I don't comment about that. We will keep on postponing. Whether if we can postpone, we will definitely postpone. This is after tax. We will not get anything. So this is a wrong practice, a improper practice, which is in vogue. And you can always alert your employer, that you can volunteer. My tentative income will be now in a particular year, in a particular month, I am getting 60,000. It will be 7,20,000. On 7,20,000, after taking into the concessions available, like to me, like PF and ATC savings, tentatively, I may have to pay about 12,000 rupees tax. So please deduct 1,000 rupees from my salary for every month. These are the standing instructions. Kindly note down so that the employees will be comfortable even in January, even in February, even in March. This is my suggestion. And the particular rate is not given in the act. The government is not able to decide how much the salary will be to the individuals. And thinking in a broader perspective, not to make any inconvenience to the salary people, they have given standard deduction, and as well as they have also given a leverage, and they have not given any tight ruling to pay advance tax, to pay self-tax, to pay regular tax, and everything when a employer-employee relation is established, the duty is bent upon employer. Now, practical issues. The employer will say, every month I have to deduct a tax from all the people. I have to go to the government, to bank, pay, and also inform the government. Yes, they have to do it. And that duty they have slowly skipped off, so that it is running to March or December or later on, whatever it may be. Please educate them. Tell them, yes, I can pay from the first month itself. I will volunteer. You can give it in writing. My total amount will be X, and you can deduct Y amount out of my income, my salary, towards the tax. They may not be initially willing because they are deviated from the procedure. They will also come to the path, and they will be happy. We will be happy. You will be happy. Lot of the people say that savings will be made. They'll be running here and there. They cannot pay, and lot of telephone calls, lot of cell calls, lot of messages, lot of reminders will come. Both employer and employee, both will be in tension in the month of March. I have come across many people. This comfortably, happily, we can avoid and see that all are happy. And the salary, yes, major part in a salary comes 1013A. This is a house rent allowance. House rent allowance is given to normally to the salaried people. A concession is given. There is no blanket concession. There is a small formula. Let me share with you. 40% of your salary or 50%. If you are a resident of metros, 40% for others of salary, the salary includes basic and D. This is first point. And HRA, what you have actually received from your employer. Actually, here you should have paid rent. Excess of rent paid over 10% of salary. Least of the following is allowed as a deduction. Least of the following is allowed as a deduction under section 10, subsection 13A. You can yourself calculate how much rent you are going to pay, what will be the calculation, take this formula, and self deduction you can make. Certain other deductions under section 1014 and certain 80C also. The maximum limit is 1,50,000. If you are contributing to pension fund 80cc, it is about 1,50,000 again. And if you are claiming for Mediclaim, it is about 25,000 under 80D and so on. You can make working and pass on the details to your employer so that in writing, so that they will be comfortable and they will be deducting the tax accordingly and paying to the government so that all are happy. Then the next the one point, Mr. Suppose you are receiving future income, one month advance you have received in this month, in this year, that also has to be account as if the salary of this year. Advance normally will not receive, but advance salary, I am saying, you have to define it as an advance salary. If you are receiving as an advance to make some expenditure and it will be repaid in small installments, that will not be advance salary. If you are given like advance salary, then only it will be part of your salary. Now, the another head comes interest on securities. This is under section 193. When you are getting interest on securities, the up to 5,000 rupees, the TDS will not be there. Beyond that, the tax will be deducted. 194 dividends. A company you have invested some amount and you are getting a dividend. There is no minimum amount. Even if you are getting 1 rupee, dividend, the TDS will be deducted. Then 194A, interest other than interest on securities. Apart from the above category, no TDS up to 40,000. And 194B, winnings from lottery, crossword puzzles, games, no TDS up to 10,000 rupees. One point to be remembered here is that 30% tax deducted, it is called a presumptive taxation. There is no further taxation. The government will take away 30% TDS as presumptive income and also tax. Similarly, for 194BB, deduction of tax from winnings from horse races up to 10,000 no TDS, and the tax rate will be 30%. And that itself is enough because lotteries once a while we will get and no filing of return, no tax payment, nothing will be there. 194C. This is a major area where the business people will be dealing. This is with regard to contractors. A contractor can be a main contractor, a subcontractor. A main contractor, when he is getting 30,000 at a time or in aggregate of 1 lakh rupees in a year, the TDS provisions will come. The TDS to be deducted is at 2%. And the contractor who gives subcontractor, he has to deduct at 1%. 194T says insurance commission, no TDS up to 15,000. 194E, payment to non-resident sportsmen, entertainer, no minimum limit. 194EE, deduction from National Savings Scheme 2,500. 194G, deduction of tax, commission, etc. on sale of lottery tickets. No TDS up to 15,000. Hitherto we have seen lottery lump sum amount what you have got. Here when you are getting a commission. And 194I, deduction from income by way of rent. This is a very important. No tax is deductible if the payment during the financial year does not exceed 2,40,000. I am there, I am a tenant. Suppose I am paying rent at the rate of 20,000 per month to my owner up to 2,40,000. I need not deduct any tax. If I am paying 2,50,000, I have to deduct tax and pay to the government on the rest of the amount, to rest of the amount of 10,000 rupees. Section 194 IA, transfer of certain immovable properties other than agricultural land, no TDS up to 50 lakhs. When seller and buyer are there, when buyer is purchasing a immovable property other than agricultural land and he is paying more, the value consideration is more than 50 lakhs, he has to deduct 1% of the amount and pay to the government. And section 194 IB, payment of rent by certain individuals and HUF, no TDS up to 50,000. Section 194J, fee for professional or technical services, no TDS up to 30,000. Section 194 LA, compensation and acquisition of immovable property. The central government or state government may be acquiring the property for public purpose or for other purposes. There will not be any deduction of tax at up to 2.5 lakhs. 194M, contractors' income, commission fee for professional or technical services, no TDS when aggregate sum created paid during the financial year does not exceed 50 lakhs. 194Q, purchase of goods, no deduction up to 50 lakhs. And nil deduction or deduction at lower rates deals with 197. And the other headings we have already covered now. Section, it is very important. Nil deduction or deduction at lower rates. This is one, having seen the mandatory provisions of 192 to 195, where the legislature made the government is welfare oriented, concession oriented, convenient oriented, and they have inserted section 197. There is no tax deducted or a lower rate is deducted. For when you are deducting a lower rate has to be deducted, then one has to go to the government income tax officer and solicit his permission. To avail this benefit, the SSE, whose TDS is likely to be deducted on certain receipts, should make an application before TDS assessing officer who has jurisdiction over his or her case. The SSE deductee concerned may apply for a certificate for nil or lower deduction TDS on the receipts in Form 13 under Income Tax Act. Lower rate of tax deduct shall be determined with the parameters of Rule 28AA. Rule 28AA provides that the assessing officer will issue a certificate for lower deduction or non-deduction on the basis of existing and estimated liability of the recipient after taking into considering the following: tax payable on the estimated income of the previous year, tax payable on the assessed returned income, existing tax liability, advance tax payment. The certificate for tax of deduction shall be issued direct to the person responsible for deducting the tax under advice to the person who made the application for issue of such certificate. The certificate under section 197 cannot be issued with retrospective effect. It can be effective only prospectively. In one of the important cases, Larsen and Turbo Limited versus CIT 2010 190 taxman 373 Bombay, it was held that the assessing officer, when he rejects an application, is bound to furnish the reasons which would be demonstrate an application of mind by him to the circumstances which are mandated both by statute and by rules to be taken into consideration. It was also held in this case of an assessing officer rejects an application of an SSE submitted under section 197, it can be revised by the commissioner. When recipient does not furnish his PAN, 206A comes into picture. When a person is not able to purchase a PAN number, there are six instances. As time is running out, there are six instances where you can comfortably go through, and 20% will be the minimum payable. However, if it is on the higher side, it will be on the higher side, and 20% of the tax will be deducted. This is also clearly mentioned in DIT versus Serum Institute of India, taxman.com, Pune Tribunal, and CIT International Taxation versus Infosys BPO Limited, 2015-60, taxman.com, 465, Bangalore bench. If the recipient does not furnish PAN, tax will be deducted under section 192A at the maximum marginal rate of tax, that is 42.744% for the financial year 2022-23, and not at the rate of 20% given by section 206AA. All the listeners kindly note the change made by the Finance Act 2000, the present year 2022 and 2022-23. So the running year, the rate will be deducted at 42.744%. Kindly go through case 4, case 5, case 5. If it's a foreigner, name, email ID, contact number, address in the home country, certificate of being resident in the home country, if law of the country provides such a certificate, tax deduction number in the home country where it is not available, unique identification number through which deductee is identifiable in the home country. So case 6, where when the recipient is non-filer of income tax return, section 206A, when the tax is required to be deducted in case of specified persons under the provisions of the Act, then it shall be deducted twice the normal rate or at the 5%, whichever is higher. Section 206AB is not applicable if the tax deductible under the following sections: section 192A, 194B, 194BB, 194IA, 194IB, 194 LBC, 194M, or 194N. One important case law: judgment debtor is not liable to deduct tax at source on the interest component of the decree. I have to get 10,000 rupees, and the court has kind enough to give me a decree for 10,000 rupees and also interest of the 1,000 rupees. The person need not deduct 1,000 rupees tax as a TDS. This was well settled in Madhusudan Krishna versus MK Exports, 2010, 188, Taxman 195, Bombay. Transfer of interest payable account when the payee is not identifiable, section 193. The position is accepted by CBDT in its letter dated July 5th, 1996, addressed to Tata Iron and Steel Company Limited in letter 275126 of 1996 ITB. This is also confirmed by Industrial Development Bank of India versus ITO 2006 10 sort 497 Mumbai. Consequences of default. When TDS is not made, what happens? When a person who is required to deduct tax does not deduct or does not pay the deducted amount, fails to pay the whole or any part of the tax required by the Act, then such a person shall be deemed to be an assessee in default and of tax under section 201(1). He will be liable to pay tax, interest, penalty, and prosecution. One more important concluding point is, beside this disallowance under section 40A, 40 small letters A will also be attracted. What is meant by that? I have to pay 100 rupees. I have to deduct 10%. I have to deduct 10 rupees, then pay 90 rupees. I have not done that. Then in my expenditure, 100 rupees will not be allowed as a deduction. Then I have to pay my tax on 100 rupees also under section 40A. Lost. In the case of Hindustan Coca-Cola Beverage Private Limited versus CIT, 2007 163, taxman 355. The Honorable Supreme Court has held that where the payer has to pay deduct tax, but the deductee, the recipient of income, has paid tax on the amount received from the deductor, the department once again cannot recover tax from the deductor on the same income by treating deductor to be an SSE in default for non-deduction, short deduction of tax. Friends, I have given the best of what I can. Any questions, you may please raise so that I'll try to answer. Otherwise, you can comfortably mail to me, and within 24 hours, I will see that they are answered properly. TDS rates are enclosed for residents, non-residents, and one I will just mention, section 192, payment of salary. There is no rate given. Section 192A, payment of taxable accumulated balance provident fund, it is given like 10. Interest on securities, it is 10. As time is running out, kindly go through the chart what is enclosed for TDS for non-residents and foreign companies, and also an advisory is given for my brethren. In case of salaried employees, you just observe 41,000 you are getting, you need not pay any tax. When you are getting 41,600, you have to pay some tax like 1,000. It is an advisory table given. Kindly just go through, try to utilize it. Thank you, one and all. For further queries, please write down to pcjevu@gmail.com or contact me on 944-0066-185 after 5 o'clock. Thank you, one and all.
Thank you, sir. It was a very elaborative, explanatory, self-explanatory. And the students, I think they are fortunate. They have the full hard copy also, like, they can see that everything is there, all the tables, tax rates, and why to deduct the tax, everything. So nice of you. And then we look forward for our students. If they have any doubts, they'll keep in touch with you. I request all the students, please open your mics and give him a big hand. Thank him, all of you.
Thank you, sir.
Thank you.
Thank you,
Sir.
Thank you, one and all.
Okay. Good day.
Thank you, Mr.
We'll keep
Prakash.
it. Thank you, sir. Thank you, sir. Nice of you. Good day.
Okay.
All the best.
Good day.
And happy Sri Ramanami to all the students.
Okay. Thank you.
Thank you, same to you, sir.
Thank you.
Thank
Amma.
you, sir.
Thank you.